Good afternoon. Happy Friday. This is Sean LaBelle of the Decker Hewitt Group. Well, the weekly string of losses has officially come to an end here with all major indices considerably higher on the week. As we said last week, some of these losses, or weekly losses rather, had stretched into near century marks for some of the major indices. So it was truly a historical stretch of weakness for the market. All of that came to an abrupt end here this week as the Dow Jones actually finished higher for around six consecutive trading sessions now. The Nasdaq, meanwhile, was considerably higher on the week. Of course, this index had bared the brunt of the selling thus far. It finished up around 4% on Friday, so a real big snapback rally there. As I've been telling a lot of our readers and listeners for the last few months, things have gotten overly bearish in the market, and it doesn't take a lot to get one of these snapback rallies. And again, this is something that we write to a lot. These are always very unpredictable as to when you get these massive jumps in the market. And if you move to cash, you tend to miss out on these days, and your annualized returns drop considerably. Again, the Nasdaq was up 4% today. That is a huge number. So in terms of this week's Market Watch Weekly, it just alludes to a little bit of a conversation around annualized returns in the S&P 500. It leans a little bit heavy on Howard Marks. So for some of you guys that don't know him, he is an industry veteran at Oak Tree Capital, probably one of the greatest minds in the industry right now. He writes a monthly note that a lot of people read quite heavily. So this one just draws a little bit of commentary from there. It also looks to the inflationary data. And again, just last week, we were saying that it might take about a month before we really got some firm commentary around inflation and slowing, or until something else came out. Well, we got a little bit of something else here this morning with inflation data that does seem to be cooling a little bit. Expectations were for consumer price index to come in at 5.2%. They came in at 4.9% for the month of April. So we are seeing those readings start to roll over, which is why you saw that real big snapback rally in the index today. Again, this is because inflation data is starting to roll over. And this is something that we've been telling a lot of people now is expect that data to come in a little bit cooler, hopefully in the back half of the year. Well, we're only a few weeks removed from that now, and the data is starting to suggest that inflation is cooling. And of course, this would mean that the U.S. Federal Reserve can probably rein the brakes down here a little bit on the interest rate hikes if inflation data does in fact continue to roll over a little bit. And we'll end it there. Hope everyone enjoys the weekend, and we will talk to you again next week. Cheers.